Hello everyone, welcome back to my YouTube channel. I am Maunishri. I am currently pursuing my MBA in Sri Venkateshwara College of Engineering, Bengaluru, affiliated to VTU, Belgavi. So this is a part of video assignment and the subject is financial management. The topic of this presentation will be the meaning of equity shares, advantages of equity shares as well as the disadvantages of equity shares. So, firstly, what are equity shares? Equity shares are nothing but the part of capital among the entire capital which is given as a ownership to the shareholders, and these shareholders after purchasing these equity shares from the company, they give them they subscribe to the capital and they get the shares and they become the real owners of the company, and these equity shares are the persons who will be getting their profits in the form of dividends. And in case the company gets any loss, and these this shareholders will be liable for that, and after all of the expenses the shareholders will be considering paying the profits or losses at the end. Suppose there is a liquidation of the company, then the as per the things what we have to go, firstly the secured debentures and unsecured debentures, that is the debenture holders will have the right to get back their amount. Nextly the preference shareholders will be getting back their amount, and finally whatever the amount, if it's remaining or if it's not remaining entirely, it goes to the shareholders. And share capital is nothing but the maximum amount of capital the company can actually has the right to subscribe, that is the authorized capital. And in that equity authorized equity capital, capital will be going, the company will be going to issue shares, and then those will be subscribed by the equity shareholders. And apart from that, equity shareholders, as they are the real owners of the company, they will be having the voting rights, and these are also called as ordinary shares or equity shares. These are the as you can see in the image there, the whole thing is called as the equity share capital, where one each part of the equity share capital represents equity shares, and the person who has subscribed to that equity shares is called as equity shareholder. Advantages of equity shares, as you can see in the slide: potential for higher returns, dividend income, ownership and voting rights, liquidity, diversification, inflation hedge. So firstly, it is potential for high returns, as which are these are the real owners of the company. They'll be getting their part of profit in the form of dividends, dividend income. Exactly, they will be getting their incomes in the part of in the form of dividend, and these are the real owners of the company. Liquidity, it's something but whenever the equity shareholders have to exit from the company, they can just sell their shares, and just they can come back, like they can just sell their shares, and they can exit from their ownership of the company. And as soon as they have any interest, they can even come into the ownership of the company by buying the equity shares. And next we have ownership and voting rights. Definitely, as we have discussed, these are the real ownership owners of the company, and these have the voting rights to vote who will be the person or who will be the board of directors, etc. All of things. Diversification, here diversification is nothing but it has different sectors and industries, so here the risk will be reduced and also the poor performance will also be reduced, so this will be an advantage for them. And inflation hedge is nothing but here over a long period of time, when the equity shareholders will be having over a longer period of time, due to the inflation they'll be able to get higher rate of dividends or profits. And as you can see here, the stock markets tend to grow faster than the inflation rate. Even though the inflation rate will be 7 to 8%, the stock markets can give the return of more than that or double than that, so always the equity shareholders will be benefited. And when we talk about the disadvantages of equity shares: market volatility, no guaranteed returns, dividend are not guaranteed, requires market knowledge, potential for capital loss, management decisions. So these are the disadvantages. When we talk in detail about this market volatility, so the shares, when we cannot say that always the company will have a progress every time, there may be some situations where the company might come and loss, and that loss will be faced by ultimately by the shareholders, that is equity shareholders, because that will be a disadvantages for them. No guaranteed return, exactly. when the company is undergoing in the loss position, they cannot go and ask for the dividends only for the debenture holders. Even if the company is going under the loss, uh, it is the duty of the company to pay the interest to them, because that will be a liability, and this is the equity. So therefore the equity shareholders have to face the loss, and dividends are not guaranteed. So in this year the dividends may be around 5,000 for example from a company, and the next year we cannot guarantee that the dividends will be 5,000. It can be more than 5,000, it can be 8,000 or 3,000 or even less, which can undergo even loss also. So we cannot predict, there is no guaranteed dividends, and requires market knowledge. Definitely here the shareholders have to require the market knowledge, and so that they invest properly in the company shares, so that they will be benefited in the future. Suppose they take a wrong decision, that will affect them in the long run. And potential for capital loss, when there will be any loss situation in the company, so the equity shareholders could decrease, and eventually there will be a capital loss. That is when the company is actually going to loss. The shareholders, when they came to know, what they do, they just sell their shares, and they try to get back their money. By this the company will be having less amount of money and less amount of shares. So this will be a loss for the company as well. Management decisions, any kind of management decisions will definitely affect directly or indirectly on the equity shares and shareholders, because account management has to control the day-to-day operations of the business. And suppose if they take any kind of wrong decision, that will definitely affect them in the long run, which will also affect the company as well as the equity shareholders, as they are the real shareholders or the real owners of the company. So so in summary, what it is whatever the changes happen, whether good or bad, the ultimate the bearers are the equity shareholders, and the equity shares are responsible for everything, and these enjoy the ownership of the company and also the voting rights. These are all about the equity shares, meaning advantages and disadvantages. So as I said, so we have to gain the knowledge to what actually, which companies shares are actually good and which have been making a good progress, and invest in such a company, so that we will begin benefited in the long run. Because it is the decision of the decision maker, that is the equity shareholder, who has to make a right decision and invest in a right company, so that he will be benefited. And as you know, when you have to trade there, you must have a demat account, and you can manage everything through your portfolio. Yes, this is all for the video. Thank you for watching the video till the end. If you have any doubts, please do comment down in the comment box, and please do like and share my channel and subscribe to my YouTube channel. Thank you all. Have a nice day.